presentation contains current opinions of Moe Sansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compac Market Wrap YouTube update for the July 14th, 2025. I'm Mo Ansari, President of Compac Asset Management, and thank you for joining me today. Reminder, first of all, don't forget to click on the subscribe button so whenever I post an update, you will be notified and you can watch it at your convenience. Looking at the numbers last week, market slightly lower, just going back and forth, not really going anywhere, waiting for data. What is going to be the next propellant? What's going to propel this market higher? And I'm going to talk about that in a little bit more detail. S&P was down 0.29% last week. The Dow nearly down 1%. And the NASDAQ just about flat, down 0.07% for the week. But for the year, we're going along nicely. S&P is up 7%. And the NASDAQ is also up nearly 7%. The Dow is up 5.25%. So I think we went down, came back up, and now we're waiting to see what happens. I think we have to wait to see how these tariffs turn out. There's a lot of tariffs. President announced 25% tariffs on Mexico and Canada, and he said that there'll be some tariffs against the EU unless they get a deal on August 1st. So I think everybody's waiting and watching what comes out of it. I would not be surprised if some of these tariffs hold. That means they could be applied. And the three deals that we really need to make, and there are really four: EU, Canada, Mexico, and China. Those are the four deals. All the other deals we're making in Vietnam, that's important, but some with the UK, again, they're not significant. The significant is EU, Mexico, Canada, and China. We'll see what comes out of that. When do these deals get done? Do the tariffs stay on for a period of time? Do they cause prices to move up? And we've seen really the inflation not really go up. As I mentioned, since these tariffs started, that I thought they were going to be deflationary. And a lot of people said, why do you think prices will go up? Well, I think demand will fall off. If prices go from a car for $30,000 goes to $40,000, it pushes a lot of people out of the market. They say, you know what? 30 is something I could afford, 40 is out of my pocket range, and people might cut back, and that's what I think is going to happen. Demand is going to fall off, and that'll slow down, I think, overall the economies. Last week, energy was the best sector that we saw. The worst sector last week was financials. This week, we start getting earnings. So earnings, I believe, should be okay. It's still holding up very well, but the market is fully priced. The PE is around 22 for the S&P, which is pretty rich when you look at it overall. Either earnings have to go up or prices have to come down, and I'll talk about that in a little bit more detail. Looking at the oil market down to 66.5, it's down a little bit more today. We're seeing gold and silver holding. Interest rates back up. They went from 4.35 to 4.43 last week on the 10-year Treasury, but still in that Goldilocks zone, somewhere between 4% and 4.75%, right in that range. We're just going back and forth, back and forth. Weekly tariffs, effective and statutory. This is interesting. This is what was announced, let's say in 2025, and this was the real rate because companies front-loaded some and so on. So what the companies are really paying to what the rates that have been announced, the tariff rates, is different. So we'll have to wait and see. Again, rates are expected to jump up to one of the highest levels, tariff rates, on August 1st. Depends if we make some deals and the deals get done, or we push those dates back a little bit more so the negotiations can be completed. But we are starting to sort of level the playing field. I've said this for 25 years, that it is not fair that everybody gets to ship everything they want here to the United States tariff-free. When we want to export to their countries, it is not tariff. They have put tariffs on our products. So I just want to see a level playing field. There are some, obviously, industries that they want to protect. There's some industries we want to protect. So there's room for negotiation. But tariff deals take time to negotiate. To get them done in 30 or 90 or 60 days it's really a quick time. So I think we'll have to see how much time more they'll be pushed back, or are they not. I believe that the market has sort of discounted tariffs at this point. They're not even paying attention. And that's one thing that could hurt the market if some of these tariffs stick. They're not pushed back, or there's not more time to give, and some of them start to really get stuck there that, okay, we're going to have 50% tariff on this, 25% tariff on that. That could really hurt trade. And again, four of the biggest ones are Canada, Mexico, EU, and China, and we'll see when those deals get done. Initial claims fell. The economy is doing okay. Job market is also holding well. But this week, the big number is going to be the CPI, Consumer Price Index. If that comes out, it's expected to be up 0.3%. Previous was only 0.1%. So if we get it lower than this, there could be some expectation that the Fed could lower interest rates at the meeting later on this month. I don't expect it. The chances are about 5% that they're going to lower rates this month. I think the next meeting is in September. That's when they should, and they could lower rates depending on how the economy and the inflation. But the big number this week to watch is Consumer Price Index, and then we have the Producer Price Index. On Wednesday, we have retail sales on Thursday, and then we have housing starts on Friday. So a lot of data coming out that can impact the market. It was a very light data week last week. This week we have a lot of data coming out. It'll tell us where inflation is and where we're headed as far as, and give us some idea where we're headed with interest rates. That's really going to be the key. Looking at the technicals, till 63.5 to 64 has been the Fibonacci target from this high that we had made in February. That's the projection here. We're close to it. We got to close to 6,300 last Thursday. We backed off, supported 62.63, then the 50-day moving average, which is right around 6,000 plus or minus. That's what we're seeing there. Weekly charts, again, targets are up here. That's what we're seeing right along this area, 63.5 to 64. Again, we're close to it, not quite there yet. I think we're close to a high right here. And that's what I do want to talk to all of you about today, that if you felt uncomfortable here in April, when the market came down from the high to all the way down to this level, and you felt uncomfortable down here in April, then this is the time that you rebalance your portfolio, that you take some risk off, that you put things in that protect you on the downside. Depending on where you are in life, where you are in your financial plan, your financial planner, your portfolio manager, you need to talk to them and do it now, not when the market is down here and you're wondering what to do and you're all nervous about the decline in the market. Talk about it here when the market is at or close to new all-time highs. NASDAQ also continuing to move higher. Target on the upside still around 21,000 to 21,500. We are at 20,500. So about 1,000 points from where we are. Support is 19.2. That's the week in 19,200. Then 18,677. That's the 50-week moving average. 10-year yield stuck in a very tight range right here. The 50-day is 4.39. The 20-day is 4.36. And the 200-day moving average is 4.34. So we are just in this tight range. This has been the top. This has been the bottom. And we just continue to move back and forth, which is okay. And the rates here, I think, are not a problem for the market. Gold sort of going sideways also. It has lost some of its upside momentum. Target is still from this high, projected to Fibonacci projection is around 3,600 or so. We're at 3,300 today, just bouncing out. Crude oil went up. Today it's down big, down about $1.50 a barrel. It pushed right up at the 200-day moving average. It was above that this morning, but it's trading right now, as I do this update, around $67 a barrel. So it's not really a lot happening. This is something that Javed wanted me to put into the charts, the Bitcoin chart. This is the IBIT, which is the Bitcoin ETF, and the projection for it is around 72 for the ETF. We're at 68 up 1.41%. We gapped up today, and we are trading right now close to the lows. But the gap up right here and this gap right here, we're seeing two gaps, and these might be exhaustion gaps. We're coming to the end of this move. This was wave 3, but we have a little bit more on the upside, and we hit the 5th wave high. And you know, once we hit wave 5, usually the market backs off from there, unless we go right through 74 and a quarter, 74 and a half on the ETF, which is 68 today. If we go through that, then we have to start looking at longer term targets. But something to watch, because this has become the new store of wealth. But Bitcoin moves more with the NASDAQ and more with aggressive assets rather than gold. So something to keep in mind, that it usually goes up when the NASDAQ is going up, usually comes down when the NASDAQ is coming down. Javed and I will talk a lot more about these markets on the daily podcast, which is about half an hour to 45 minutes. You can always download that podcast from the Apple Store. Just go down, type in Mo Market Wrap with Mo Ansari. You'll get the free app, and you can listen to a more detailed update. And for all our clients today, I'm going to this evening do the quarterly webinar where I review what happened in the last quarter and preview what I expect to see in this coming quarter. That is for all the clients. That's the client quarterly webinar. It's going to be at 6 p.m. Pacific time. Again, don't forget to subscribe to this channel, so whenever I post an update, you get notified. And don't forget to listen to the podcast. If you need help with your portfolio, give us a call at 800-388-9700. You want to review where you are right now. You remember where you were in April. You don't want to go back there. Give us a call, or just send in an email at invest@compact.com. Those are my views. Those are my thoughts for this week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors, because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.